Now, to invest with your home equity takes a little bit of work and a little bit of skill, but you also want to make sure that you're making money when you borrow that money. Last thing you want to do is borrow money and then not make money from it. So what I've done is I have over time refinanced, did home equity line of credit, did cash out refinance and all that sort of stuff to actually tap into my house's equity, my own personal private house, to then buy rental properties that make me $250 or more every single month in passive income. And I want to show you how to do that, how I use and how you can use your home equity to buy properties. Hey guys, my name is Dustin Heiner with Master Passive Income, and I want to show you how to quit that JOB, that just over broke job, by investing in real estate rental properties so you never ever have to work a job again. Now, when we're thinking about buying properties, getting funding and financing is one thing that we all have to struggle with, deal with, but we have to get through. And home equity is just one of 14 different ways I've actually used myself to buy rental properties. In fact, I have an entire video walking you through all 14 different ways to get financing. Check the link in the description for that video, the 14 different ways to get funding for your business, or that comment card right up there will show it to you as well. Watch that video because I'm gonna give you all 14 of them. On top of that, today I'm gonna talk to you about your home equity, using a home equity line of credit, cash out refinance, and everything about it and how you can make money from your home equity. It's so brilliant. I've done it so many times. I will walk you through every single step of the way. Now, when you're using your home equity, what it really comes down to, your home's worth and how much you owe might be different or would be different, so you can pull out the value of the home. Let's say you owe $100,000, but your home is worth $200,000. Well, that's $100,000 in difference, basically equity. That is money just sitting there in your house that you could potentially tap into. Now, what you can do is you can actually get a home equity line of credit, which we'll go into, as well as you can also do a cash out refinance, where you pull out the cash of the property by getting another loan that gives you cash on top of how much you borrow. Now, here's what actually you need to look at. The home equity line of credit, as well as a cash out refinance, there are stipulations. Like, number one, you can't go above 75 or maybe even 80% of the value of the house. You can't borrow more than that. And what that looks like is if you have a home that's worth $200,000, well, 80% of that is $160,000. If you owe $170,000, well, $160,000 is lower. It's less than how much you owe. So you cannot do a cash out refinance. You can't even do a home equity line of credit. But let's say you owe $100,000 on this $200,000 house. Well, that is $60,000. Remember, you can borrow up to $160,000. That's 80% of the $200,000. $160,000 you can borrow, but you owe $100,000. If you did a cash out refinance, basically you refinance your house with a regular bank, and you got another loan at 80% of the value of $200,000, your new loan is $160,000. Now, with the $160,000, you take $100,000 to pay off the old loan, but then that $60,000 left over goes into your pocket and you can do whatever you want. Now, here's a beautiful thing about doing a cash out refinance. You're getting $60,000 in your pocket. That is not taxable. Let me say that one more time. This is not taxable. The IRS sees this as a loan. Even though the money's going into your pocket, you could buy whatever you want with it. I suggest buying real estate where that'll make you money. That is not taxable because it's a loan. You're not selling your house. Now, if you sold your house for, $160,000, that would $60,000 could be taxable if it wasn't your primary residence, all that sort of stuff. And I personally keep my money in the Life Goals Home Down Payment ETF, saving your down payment at a bank yielding 0%. While home prices are going up in double digits, you're getting crushed by home price inflation. Check out conservatively managed Life Goals Home Down Payment ETF. The ticker symbol is HOM. No lockup, no minimum, no attempts to keep pace with price inflation. And oh yeah, you get a 2% dividend every single month. I love getting my dividends every single month. I just put it right back in HOM. So full disclosure, I invest in that as well. Now that you know how much you can borrow, let's say 80% of the total value of the house, you look at how much you owe. If you have a difference there of like, let's say 10, 20, 30, 40, $50,000 or more, it might be really worthwhile to actually cash out refinance, as well as a home equity line of credit. Now, before I jump into the home equity line of credit and the cash out refinance, let me talk to you a little bit about why you would actually do this. And the big reason why is because you can make a lot of money with your home equity. Let me give you an example. let's say that $60,000, remember, same exact numbers, $200,000 is the value, you owed $100,000 and you cash out $60,000. Let's say with that $60,000 that you cashed out, you went and bought one house for cash. And literally, there are houses that you can buy for cash for $60,000 in the Midwest, down in the Carolinas, and in Florida. There are houses that sell for $60,000 or $40,000 or $30,000. But let's just say, for round numbers, you bought one house for $60,000 cash. But that house is renting for, let's say, $800, $900, $1,000, round up to $900. Well, your mortgage payment, the increase, remember you're borrowing a little bit more, that $60,000 increase in mortgage payments is probably only going to be about $200 more. $200 to actually make $900 on rent with your property manager fees, your taxes, your insurance, other things, you'll probably be pocketing close to $400 to $500 a month in passive income from taking that money out of your house and putting it into a new house, buying one that makes you money. Now, the great thing about this is once you pay off that home equity line of credit or that cash out refinance, you still have both houses. You have your first house that you put the money out. You also have the second house, your rental property. You have that as well. Now that mortgage is paid off. You're making all that money in profit. And you might be wondering, well, man, Dustin, how do I actually do this? Don't worry, I got you covered. I have my free real estate investing course. Look in the description. It's masterpassiveincome.com/free course. masterpassiveincome.com/free course. And I will literally give you my real estate investing course absolutely for free. It's going to show you how to find a new area of the country to invest, like all over the country, no matter where you live. It's going to show you how to make it an automatic business that runs itself, how to find properties, how to fund, get money for properties, how to do everything where you're making $250 a month in passive income. See, I have 30 plus properties that make me a minimum of $250 a month. In fact, some making me $500 or $600 or $700 a month in passive income. Just imagine that. If you have one property making you $250 a month, that's $3,000 a year. Now imagine if you have 10 properties making $250 a month, that's $2,500 a month in passive income. That is $30,000 a year in passive income. It'd be super phenomenal if you did that. Number one, before you actually pull the money out of the property, you already have your business built. You're already ready to buy an investment property, because the last thing you want is to pull out money out of your house and then have to pay interest on it when that money's just sitting around, not making you money. So you want to have the business built. And again, get my free course. I will literally show you how to actually build the business to do it right, where you're making $250 a month. Now, once you already have the business built, you're looking for properties. You're having realtors, wholesalers, you're having other people find properties for you. Then you find one, you get it under contract, and you're ready to start buying. Now, as soon as you have the business ready, you need to start getting your home equity line of credit or get your cash out refinance done. You want to get that process going, because it's going to take about a good month, maybe 2 months to do either one of these processes. And they both have a little different nuances. And I'll tell you a little bit about why you would want one versus the other, home equity line of credit or do a cash out refinance. I personally like cash out refinance, but a home equity line of credit is fantastic too. Now, you have the business built, you get process going with a mortgage company. You say, hey, I want a home equity line of credit. They'll say, okay, great. We'll go ahead and get you set up. Or you say, I have a cash out refinance. They'll get you set up there too. Now, what you're going to do is you're going to be talking to the banks about terms, about finances, about your income, about everything, like your interest rate, everything else is going to be talked about. Now, what you have is the home equity line of credit and the cash out refinance. Think of your home equity line of credit as a credit card, but your house is what is securing the loan. So a credit card, you have a credit limit. Let's say you have a $10,000 credit limit. You can charge up to $10,000. As soon as you get to that $10,000, it's not going to let you charge anymore. Same thing with the home equity line of credit. Remember, same numbers. You owe $100,000, but you get a $60,000 home equity line of credit. Well, with that home equity line of credit, you can charge and borrow up to $60,000 from your home equity. Now, same thing, just like a credit card, you pay it off every single month. And as you borrow more money, you pay a little bit more. As it goes down, as just like a credit card, you pay your balance down, you'll pay less in your payments. Think of it just like a credit card. It's really that simple. It's literally a credit card utilizing your house as the ability to pay back the loan. Now, with the home equity line of credit, you can dip into it anytime you want. Basically, get a checkbook, write a check, and then boom, you actually cash out that home equity line of credit. Now, your terms are going to be a little different. They're going to be fairly low, but not as low as a conventional loan, a 30-year loan, which is the cash out refinance, what I'll go into in just a second. It'll be a little different nuances, but they're going to be comparable. The biggest difference is the home equity line of credit is like a credit card. The cash out refinance is just getting all that cash right up front, putting in your pocket, $60,000 right then and there. And like I was saying about the home equity line of credit, think of it like a credit card. But the cash out refinance is basically you're refinancing the house, but at the very end of the refinance process, you are getting cash. And no kidding, I've literally done this where I had a house that I think I had like 6% interest rate on it, and I wanted to do a cash out refinance. Well, my payments were like $850 a month, and then I did a cash out refinance. With that cash out refinance, the interest rates got better. I think I got down to like 4%. With that 4%, my payments stayed the same because of lower interest, but I pulled out $60,000 or $70,000 in cash out refinance so that I was able to then buy properties. So the exact same thing, if you were refinancing your house just to get a lower interest rate, same thing, exact same thing, except at the very end, you get cash in your pocket. Literally, they send you a check, or even better, they'll wire it into your account so you get that money right away. Now, here's the big things that you need to do. In getting a home equity line of credit or doing a cash out refinance, just like I said, you want to make sure that you are ready to deploy, put that money into a property so you can start making money. Now, the big thing that you must do is make sure that this next property that you're going to buy is going to do two things. Number one, it's going to pay off the increase in the mortgage. Number two, it's going to put money into your pocket. You're going to make money in passive income from the property that you're buying. That is crucial. You don't want to just trade one for one, like you get money and you pay off your mortgage and that's all you make. No, you don't want to do that. In fact, I cashed out one of my properties for $50,000 and I bought two properties. The first one paid for the increase in the mortgage. That first property that I bought paid for that increase, and I made like $50 a month on top of that. The second property actually bought the property, and that made me $300 a month in passive income. So I was like $350 a month in passive income from pulling out that money. I think I had a little bit more to buy another property, and I even had more. So this is a great way to tap into your properties to actually get more money out to buy more properties. Now, here's a great thing. It's not just for your personal residence where you actually live. It actually goes for your commercial properties, your residential homes, your investment properties. You can do cash out refinance for those as well. Now, you will need to make sure you find good banks that actually will have that, I guess, criteria that they would do cash out refinance. Some won't. You just need to keep calling around. That's the biggest tip I will give you. If you want anything done in banking, refinancing, home equity line of credit, the biggest thing to do is to call many banks. That's the biggest pro tip I'll give you. Every bank has different criteria on everything that they do. So what you want to do is you want to shop around until you find the right bank that's going to give you the right terms, the right money invested, how much it costs, and all that sort of stuff. You want to make sure you get everything accounted for. And you guys smash that like button. If you got anything out of this video, I really want to help you. Subscribe to my channel and hit that notification bell because I'm giving out so much great free real estate investing advice. All right, you guys, take care. Watch this video right here. I'll see you in the next one.